Good morning. I'm Epstein with your morning flash update for this Monday, and it's the first full Monday of the year because we had New Year's Day a week ago. Just think about that. So here we are, markets getting back to normal, and it is January 8th, 2024, and I'm very early. I'm at 6:45 a.m. Central Time, as I have an appointment that I have to be out at 8 o'clock this morning. Then I'll come back. So for those of you with my SPDR ETF, you've been told already that I am going to be late, and I will not be overly late because I should be back, hopefully, 9:30. By the time I get it out, I'll be about a half hour, 40 minutes late, but I'll get out everything I should. So I'm a little surprised that we were down today because late yesterday evening, we saw that the leaders of Congress have said that that doesn't mean that Congress has, but they have reached a deal in substance as to the size of the budget in a certain portion so that they can meet a January 19th deadline. Now, the reason the market might be down is them coming to an agreement is not how the chambers necessarily will look at it. So you have to get these bills to the floor. You have to debate them. You have to see who's going to be the holdouts. In the House, the big question will be is if Speaker Johnson decides to go with this and bring it to the floor, will he be able to get enough votes out of his Republican majority, or are they going to need Democratic crossover? Because it's a meeting of the minds, I would think that it'll be a crossover in there, and you can still get the holdouts from the Republicans. The question is, how nasty does it get? And does Mr. Johnson hold on to his job if somebody wants to really get nasty about it? Those are the things you're dealing with. Now, what we're going to deal with between now and March is whether or not the Fed makes its first rate cut in March. The jobs data last week, to me, did not say a rate cut. Not in March. April, June, possibly. But you have to get the CPI, PPI data out. That's going to be the end of this week. So we'll look at that and see how much that is falling, if it's falling, where it's at, and how that all fits in. But if I were, and I am a betting man, obviously, in this industry, no, I don't see the March, and yet I'm in the minority. The majority think there's this over a 60% chance that you will get your first cut in March. We'll see what goes on. The dollar index is up just a fraction, and most currencies are just bouncing around right here, not doing anything. Yet the gold market has let go. You've let go in the silver market. The copper's fairly stable, and platinum continues to drop. So the inflation pressures are down, and as you can see, you're down about $2 a barrel in the crude oil. You're down in the heating oil. You're down in the natural gas, and as you can see, as we look at all the energies, underselling pressure. You're down a little bit in the grain markets as well. Bonds and notes are fairly stable right here. And I think bonds and notes want to see the CPI, PPI numbers coming out. I think they're Wednesday and Thursday. And from there, make their decision what they're going to get. Now, remember, we have a January, I think it's the 30th and 31st is the FOMC meeting. I'll check on those dates. Then we have the next one in March after that, nothing in February. That means you're going to get 2 more jobs reports before the Fed meets in March. You get this week's CPI, PPI, then you get next month, and you're going to get March's as well. There's a lot of data that's going to move around in these markets, so I think you got to keep your eye on it. What will move the market today is the fact that so many traders are back from holiday. Now, do we have any real economic data? Not really. We get Atlanta Fed President Bostic. He's going to talk to a Rotary Club in Atlanta around 11:30. We get the Federal Reserve's November, not December, the November Consumer Credit Report. We will see how much that went up by. In the Eurozone, economic improvement in the sentiment indices. You're at 96.4. They expected a 94 reading in the economic sentiment. The consumer confidence improved by 1/10, and industrial confidence improved by 0.8. So you're getting a little better read there, but doesn't really mean anything. Just not yet. The arguments are going to be who's going to cut rates first, when are the rate cuts going to begin, what will they last like, how many will they go in, blah, blah, blah. We will cover all this and more, but I want to remind you, there are patterns in charts you see all the time that you want to learn to work with. One of the common ones, is the outside day. Is it a continuation pattern? Is it the end of a trade pattern? What does it mean? Does it have twists and turns to it? In other words, false reads, where now you get a trend that kicks out of there because of it. Well, I put this together in a course for you called Outside Days. And it's so important because you get these probably often. It's 9 video chapters. It includes our charting software. It also, if you take the course, includes access to my morning videos. Whether you get them or not, I throw them into this for 2 weeks for you so that you get to see how they play out in real time, what I describe with them, what I think will happen as they occur. If you'd like to find out more, just go to iraepstein.com, education. You'll see that right on the website. You can also click right up here. There'll be an icon. I'm Ira. No more talking about our sale. That ended last night and over the weekend. It was a great sale. Thank you all for joining in on that. I'm Ira. You have a good day. I'll catch up with everybody at the end of the day wrap-ups. Have a great trading day. Take care.